Good morning, everyone. All right. So although Tesla's gapping up, I'm really not all that interested in playing it anytime soon. It still has just so much overhead resistance. We're below the 50 moving average. The best case scenario I could see is you build some kind of bull flag right here and then take out the 50. But I just think there's a lot better out there. But I did move it to bullish gappers list. So VRT is another good one. This is, you could see, it's been like in a perma uptrend. It moves pretty closely to NVIDIA, but this has been a very strong name. It is unfortunately extended on the weekly. Cart. Old alert. So this one's obviously a gapper, earnings gapper, but I just don't like the way the stock moves, so I'm just gonna ignore it. Boeing's gapping up for some reason today. SPR moves almost identically with Boeing, and a lot of people are interested in trading Boeing because they think it's very oversold. Well, if Boeing's going to bounce, so is SPR, and SPR obviously has held through the pressure much better than Boeing. Actually, it's kind of uncomparable. So for me, I would just look to trade SPR instead, which is very liquid, has cheap contracts, and as you can see, it's up 4%, as Boeing gapped up 5%. So it moves with Boeing. So it's basically like trading a gold miner when you think that gold itself is bullish. So I would recommend, if you want to get some kind of exposure there, to trade SPR instead, because it's obviously showing tons of relative strength. And you go ahead and throw that one on the bulk list. We'll see. I would like this to kind of build out a bull flag. Obviously take out the downtrend line, and then maybe have a quick move up where I don't really care what happens at the 50, but it's going to be enough of a move higher that SPR could maybe break to the high of this range. So these are all the bearish names that we were watching. You can see obviously Visco is still very weak. Foot Locker even, that's actually a very nice consolidation, sideways consolidation versus pullback, right? So it's the better of the two for potential shorts. J&J, This is right now really where you get in. Right after this candlestick closes. The 10-minute. I mean, ideally you get in. You have a double top right here too. If you look at J&J, ideally you get in before the market reverses. If it's gonna reverse, we don't know, but it's the place where it would reverse. So now you're losing the 5 EMA. You can see we're rejecting off the short-term moving averages. This is like a textbook pullback setup for me. I just don't really want to care to short the market. You look at the Qs, right? You break down from the base. There's really 3 places you short. The best place to short: the breakdown itself. You short the retracement into the former support level, or the lower low, which would be right here. There's like the 3 best places to short. So if we had a bearish bias right now, we would expect to reject off this area anyways, although we didn't lose the uptrend support yet, on the short-term uptrend support yet. The weakest names are going to do that before the indexes. So by the time SPY or QQQ lose their uptrend supports, this will already be down here maybe. So that's what I'm saying. This is where if you believe the market's to move lower, this is a beautiful short right here. I'm gonna look at the contracts. I gotta get my phone. I know they're very cheap, J&J. It's just not a fun, not a fun sector to trade. And XLV, you can see it's very weak, the healthcare sector. So it's rejecting off of, well, let's see if it lost its short-term trend. Not quite. So the sector itself is still above the 5 EMA, but J&J is below it. What does that tell you? J&J is showing weakness. So that's a good short. If anyone's interested, high day stop. This is bear flagging Verizon at the base support. Really, I think the best entry is. So something you could do, anticipation setups, is you could get in right here. You could just short it, and then you pick whatever moving average, either the 20 or the 10, as your stop loss. So you could say, I want to use the 10 as my stop, so maybe you'll use maybe the midpoint between the 10 and the 20 as your hard stop, just so you can get in during this flagging area. Or you wait for the breakdown or some kind of trendline break, but at that point the move already kind of started, right? So if you want to be more aggressive and you believe there's more downside, then I'm just trying to give options, you know what I mean? Like, you don't always need a pivot. You could sometimes just anticipate the move. However, you have to know how to handle that kind of setup, which would be you just use one of the short-term moving averages as your stop. Sometimes it doesn't really make sense to do that. For instance, if we would have shorted AbbVie, say we got into great here, that's going to be a really wide stop up to the 10 moving average, right? But that is just another way to get involved with the stock. And it's something I'll do when I'm very confident in the future trend. For instance, I haven't done that in quite some time, but over here, the first leg up, I was very bullish. So I was doing that quite frequently. I don't know if whoever was in the Discord at that time, this is when the Discord wasn't even public yet, I was very, very active here during this period of time here to the long side, just because it was very easy to be long because the market was very pessimistic, or the sentiment was very pessimistic. I knew that we broke into stage 2, but everyone was still treating it like we were in a bear market. It was just easy to, position yourself on the opposite side of the market. Starbucks, this is another, potential rejection off the short-term moving averages. So just like when the market is entering a correction, like that sequence where you first lose the 50 moving average, the uptrend support, then you lose, or I don't know where the support was, let's see. Right here. So you first lose that uptrend support, and then you lose the 50. When you're trying to trade a short-term trend like this, you're first going to lose that uptrend support, and then for me, the second part of that sequence is you make a lower low in the course of shorting, or maybe sometimes you'll get a reversal pattern, like a double top, but that's like the second part of the sequence, and that's where I will enter. So it's telling me, that sequence is telling me that the stock is potentially reversing. How much downside you get, well, no one knows, but it is a valid entry point. So what is this? So you can use the J&J sample example again. So we want to short into the short-term moving averages. You can see that the first thing that happened was we lost this happened the same exact time, but we lose the uptrend support, and then we break down from a reversal pattern. So double top, right? Your first top, your second top, you break down. The bulls tried to make a higher high, but they were unable to. So it's like if I flip the chart, you can see it was like an undercut reversal. So look at the volume, it looks good. So I was just trying to walk you through my thought process. And then, obviously my entry right now is right over this 10-minute candlestick. So I'm in. Not really, but. And then low of day could be stop. Low of gap could be stop. Or you can use prior day's low as stop. You didn't make that decision. Or really, obviously this is inverse the chart, so it would be high of day. High of gap, I would use this area. Or prior day, high. So just watch it now, even if you don't enter. Just see how it plays out. First target, say we pick high of day as stop. It's going to be 1R, so 176. And then second target. Then you just set your alerts. And you don't watch it anymore. There's no point. I forgot to set an alert where my stop loss would be, but they process. There's no need to stare at the chart. It's just more likely to activate your emotions and you intervene in the trade. You check it maybe 2-3 times throughout the day. Make sure it's checked the last hour of the day, but other than that, Just let the stock work for you. So this looks like it could be a bear flag on gold. Same with silver. Right? It looks like you got your pull, your bear flag. This blue line here is, if we were to break above it, maybe a little higher it should be. That would be more than a 50% retracement from the pull, which would therefore invalidate the bear flag. And I will consider just exiting. I mean, I've been in this trade for a long time, and I'm just tired of looking at it now, to be honest. I got in on this day, I think. I bought some here, and then I added to the position here for gold. And now I'm profitable, but I'm kind of over it. So maybe hopefully we lose this uptrend support and get a retracement down the 50 moving average. That's what I really would like. Same thing with silver here. Silver is still above that uptrend support marginally, which is probably why it's been showing some relative strength the last 2 days. Usually it moves down like twice that of whatever gold does. But they look like they're in good shape still as of right now. Despite the dollar selling off 0.4% yesterday, they closed both in the red, I believe. So, or silver maybe marginally in the green. But they didn't take advantage of the weakness in the dollar, which is showing that they're at the very least neutral right now. There's not a lot of strength there. If they would have really taken off yesterday, I would be a little more uneasy. So this is where you would expect the Qs to reject in this general area. You have the 50 moving average right overhead, so this is going to be a major... I would expect a strong reaction here if this is truly a bearish setup. Or if the bears are truly in control. So that's where we are right now. You can see the 50 moving average a little more elevated here. So really it's like just no man's land here. Like even if you break above the 20, there's not really much reason to go long because you have an even more powerful respected resistance overhead. And then same thing. But the thing is with IWM, a lot of small cap names don't start reporting until the week following the Fed week. So like 2 weeks out. So that's where this is going to start to get more volatile. And after that earnings, those stocks report their earnings, wherever the index sticks or is at that point in time is likely to stick, in either a bullish or bearish posture. And then SPY is also right at that resistance level right now. So if we were looking to short the indexes, we just have our uptrend lines like so. And then we look for, put on the short-term moving averages. So then we look for some kind of rejection off of the moving average area. You could overcut it, come in, give us some kind of reversal pattern, and then you'll then have a pivot point to use as your entry point, and then it breaks down, and that's where you short. You either short the index or you short the weaker names. Now, like I said, the weakest names are likely going to already be down here because they likely lagged on the way up and started to reverse ahead of the index. So this has been a laggard, DraftKings. You can see it's not even at the 10 EMA yet, whereas the QQQ is basically at the 20. So it's bear flagging. You look at the 10-minute. Let's see. I mean, this thing has done nothing. Just look at the trajectory of the uptrend support I'm about to put. You can see it's not like the Qs like this, right? So it's obviously lagging. It's just taking out the 5 EMA now. But this is one that will likely lead lower. Although DraftKings tends to it's kind of a weird stock, but still, it's the principle here. So this would be one that would look pretty good for sure. It's funny. I don't know. I just don't think either of these charts are bullish at all. Same thing with AMD. Now, oftentimes what can happen is, since this is like I already had quite a significant move lower. With each leg down, this is probably what? This is the first. It's only a second leg down. But what you will often get is, let's say that stock is already had its full move down. You may short it right here into the moving averages, and it will come down a little bit, but then it will end up just reversing higher. So it will turn into a double bottom, and that will be the neckline. So when you start seeing that move, when it breaks down, if that move is really lethargic to the downside, and you could see that maybe it's starting to show relative strength versus the indexes maybe are all the way down to where their lower low pivot is, but AMD now is only at the halfway point. It's showing relative strength. That'd be a sign you want to get out. That would justify premature exit because it's showing relative strength now. And I don't know, I've just seen it happen many, many times before. I'm trying to think of an example I've had with the group. I can go. This was during this is the old Discord before it was public, but this is the month of January last year. You see I was very aggressive, very active with alerts. And you can see this is in a week I have 9 alerts. Obviously I've become a lot more risk adverse with the group, but things were really working back then. It was very easy to predict the next move, and we will. It's just there really hasn't been a pullback type of market since then, where there's still a decent amount of volatility in the market, enough to at least keep pulling the indexes back into the short-term moving averages, and then just rinse and repeat the same thing that I just explained, like with J&J, where you just keep on trading that downtrend break, and then the reversal signal, stuff like that. But it will come back. That's something I can promise. I can't tell you when, but that kind of environment will find us, and we'll be ready, and that's where I'll get a lot more active with the signals. But yeah, I don't know. I can't find what the stock was, but there's several instances where you'll kind of just get that feeling, where you understand the market dynamic and how that stock is acting relative to the index, that it's showing a little bit more relative strength than I would like in the case of a short, and you can exit there. Okay, so let's see what the indexes are doing. Also note the power of the move down, and then the retracement up on decreasing volume. Looks more like a short squeeze. So we want Tesla to hold the 10 EMA here. It should hold the 10 EMA. If we're long, right? And certainly the 5. So Meta reports today, after hours. This is the first really Tesla, Netflix, the market's paying attention, but they're not paying attention like they are to Meta or Microsoft or Google. Those names, Nvidia, Apple, these are like the juggernauts. So it's really important to me how we are going to react off of Meta earnings. If we go back to, what is this? Oh, we gotta work that. $4.27. Sorry for all the noise on the chart here. When Meta earnings, when it reported on 4/27/23, this was the reaction, and it was really the turning point. That the low of that day for the Qs was the low of this corrective sideways action, and Meta gapped up like 20%. So the Qs, their reaction was almost 3% move higher the next day. So I'm expecting a major reaction tomorrow, whether that be to the upside or the downside. So understanding that, you just got to think, okay, how difficult, if I want to short the market, would it be if Meta gets hammered, 17, 18%? Most stocks are going to be out of reach tomorrow. It's going to be very difficult to go short if the market does have a heavy reversal. So that's why you kind of just take that shot now with stocks like J&J that are giving textbook reversal setups off the short-term moving averages and let it play out. Because tomorrow, if the market does gap down in a bigly, then this is probably going to be down here already, and you can't really get in at that point. Then you have to wait for the lower low on the daily, which will be already far away. This is like the first leg down, second leg down. So it could have one leg more. So watching Netflix for bear flag, it's just doing its thing. Right now, you can see the moving averages a couple days back when I annotated the chart. We're just waiting for the moving averages to catch up. Bear flag and break lower. I'm sure there's an inverse Netflix chart. Really important chart. FANG stocks. We're right at that pivot as well. Google. I guess I don't have it. I know there is. You just type in Netflix inverse. ETFs. I'm sure these contracts are going to be quite expensive for Netflix. But that one's building out nicely. Let's continue on with this real quick. So that's not even... So JP Morgan actually, I'm not sure if I mentioned this yesterday, but since it's in a really strong sector, it also looks like a cup of handle now. Small cup with handle. It's holding up really well, so it's not the... wouldn't be at the top of my list for shorts. Penn rejecting off the 50, but it has earnings in a week, so I really wouldn't short that. Love is also in a really strong group. There's airliners. Ulta, that really the best entry already played out. But the short-term moving, they didn't even wait for the short-term moving averages to catch up. The day it broke down, there was still this much air. So this goes back to when I said that the strongest moves are going to use the 5 EMA as their let's find it, as the resistance in this case. That's going to push the stock down. So you can see it kind of just waited for the 5 EMA to catch up and then kind of rejected off that area, and that led to the breakdown. So strongest moves respect the 5. And when you get an initial move lower like this, it's like the first sign that maybe we are going to get a very strong continuation lower. So big gap on big volume through a key average. This is a really nice short. So this one I'll be watching for a bull flag. Sizu. Just like this. Now I want a couple days rest. Look at the contraction of volume. It was just telling you to buy it, but I missed it. I think I got alerted, but I didn't take it. See if it gives me another opportunity. So Roku's back in the base now. It has earnings tomorrow, so we'll see how that reacts. Nike, not really interested anymore. Very difficult stock to trade the downside. It's just very high short interest, so you can get caught in a squeeze. Like, this is what, 38% move in a couple of days. Get rid of it. Intel, very beat down. I don't think I would short it here. Earnings is tomorrow. AMD, yeah. Retest, you could short off EMA bounce. It's on its first leg, second leg, so I could have one more leg. Although you do have a key moving average here, so you gotta be careful. And then Riot, this thing is absolutely erupted. I still don't know the news, but honestly, I'd be looking for a bull flag at this point. This is still one of my favorite charts. NMM. And just with each passing week, it gets better and better because the 30 moving average is catching up more and more. This is definitely one I would be all over if it got above that 44.28 pivot. It's a nice earnings gapper. I like how the range is contracting as the short-term moving averages catch up. Really look to go long over here. This is a tech stock, so obviously the Qs have been hammered. It's held up pretty well. So CrowdStrike ended up breaking down from that potential falling wedge. So it needs some time to repair, but it is building out this nice base. You can see very clearly on the weekly. Building out that launching pad. Worked off those overextended levels. It was very extended here. And now it just needs a new catalyst. So maybe in a month, earnings are hot. Unless there's cybersecurity names that report before then. PanW day before. 5.2 net, maybe. That ignites the group. What else is there? Zscaler. Yeah, it's way out. This got really derailed. So the cybersecurity names just need a catalyst. And then we have our pot stocks. I'm apprehensive to go long these types of names when the indexes are still below their key moving averages, because they're perceived as higher risk, right? So especially when we're at an inflection point, the Qs can get annihilated tomorrow, and this would obviously get hit hard. So I won't put anything on today. I'll just wait. You can use that high if need be. We do have that high volume close as heavy resistance too overhead, so this really had to get going right out the gate today and give me some cushion. But right now you can see there's obviously the day is young, but you have some range contraction here today. If you look at the short-term time frames, what is it going to look like? It's going to look like a bull flag. You get the 10-minute, you get the pull, and then you're flagging, and then you look to continue higher. So it's always nice to see range contraction following a big day up. Range expansion on this day. You bull flagged and then continued it. Range expansion, bull flag, and then you continue higher. So that's how markets move. You have periods of range expansion, and then you have periods of range contraction, and that's just how they move. So we got a range expansion, range contraction. Hopefully we continue lower. Same deal. Range expansion, range contraction, range expansion, failed move, pull back in. Price action starts to get tighter. You can see you have a wider body here than you do here, so the range contracted, and then you erupted higher. Go back. You look at how silver looks right now, and then you go back to previous scenarios, and you see what unfolded following the breakdown when you have a topping pattern. I mean, this isn't really much of a topping pattern, but here you have a topping pattern. You break down on heavier volume, although this volume, believe it or not, is the same as this. And then you kind of paused for 2 days and then continued lower. I'm noting right now that it did so in a grindy fashion, so it wasn't a very momentous move lower. It was just like slowly but surely making its way lower. So I'm prepared mentally for that kind of grind lower. That was that scenario. Same thing here. You had the initial move lower. You had multiple days consolidation, and then you grinded lower. So that's 2 scenarios like that. This is just how I build confidence before entering a trade, or if I'm in a trade, helping me manage expectations. Here we had just had really a straight bleed lower. So in every scenario so far, well, really two of them there was a pause, but all three there was a grind. It was a grind lower. But I have pretty tight price targets for these, so. But yeah, so hopefully we at least play out. If not, we move on. The dollar's bull flagging right now, which is bearish for commodities. Okay, so Tesla's moving higher. There's obviously there was a lot of pessimism about Tesla. You saw that in the chat yesterday. So that's where stocks are going to reverse. That's where major reversals are going to occur. And to be fair, I was pessimistic too. I wouldn't be surprised if Tesla gapped down lower. So, you know, when the masses are all with the same mindset that a stock is likely going to go lower, that's when it's not going to go lower. The volume's pretty big so far, but it's not anything crazy. There's some stocks post earnings, the first 10-minute bar, it's already at average. So we're 40 minutes in, and it's only halfway. But yeah, if you're looking at getting a short-term trade, just would look for some kind of, ideally it gets follow through into the 50 and then builds a bull flag right there. Then you have a clear pivot to play off of, rather than bull flag right here, and then right when the bull flag breaks out, okay, it's breaking out into the 50. It's not a good setup in my opinion. This looks very similar to here, right? Undercut the 50, consolidating. Undercut the 50, consolidating above the short-term moving averages. If Meta does well tomorrow, I wouldn't be surprised to see Bitcoin move higher too. It'd be literally playing out the exact way it did during the prior leg consolidation. Okay, so Meta tonight, and then we have Microsoft Thursday. Yeah, tomorrow we have Microsoft. And then I think Google as well tomorrow. Yep, Google as well tomorrow. And then what's the other one? That's it. That's it for this week. That would be it for the big tech earnings this week. And then Nvidia is like a month out. You got Apple, which is going to be on the 2nd, the day after the Fed day. So it's going to be very difficult to put on new positions as a swing trader on either that Wednesday, Tuesday, Wednesday, or Thursday, really, because you have so many potential market moving catalysts that are occurring either during the later half of the day or after hours. Do you guys have any charts that I could take a look at? 10-year yields are also bull flagging. Slight negative. This is another way to assess sentiment in the markets. It's already back in the range, which is kind of nice to see. We'll see if it ends up just rejecting though. Let's see how this short would be playing out right now. All right, so you'd be red right now. Just curious. Those are always the worst trades. Right when you get in, you're greeted with some red. So you got to ask yourself, is this going to be the start of a move higher? Is this just going to be the pull and then you have a flag and then a break higher? Or is this going to be just a pullback before reversing lower? A lot of times I like to just look at the leading names by percentage weighting of the ETF to see what they look like. So if multiple leading names in that sector, I'll look at the top 5 are excuse me, that have more of a bearish posture and are, let's say, only their first or second leg down, and we know that they could, obviously most trends have 3 legs, then I might favor more downside. But if they're all very extended in the trend, I would say maybe this is more than likely going to be the start of a bottoming pattern. Do this. What do you got? I forget. All right, so that's the healthcare sector, and this is the names by heaviest percentage weighting. So United Health Group is going to be the heaviest weighted in the XLV, and then PFE would be the lightest weighting in XLV. At least, I mean, they're the top 5, but in descending order. So let's just see. United Airlines, they gapped up on earnings. Okay. J&J gapped down. Is that, I didn't even look at that. I might have capitulation on J&J over here. Nope. So you have like the high volume closed candlestick here. So you would expect for this to act as be a support for quite some time. We know what capitulation looks like by now, I think, right? I always go back to this chart. This is perfect. Capitulation. You just have very noticeable volume compared to the normal, right? You didn't get volume like this for a very long time. That's following a considerable decline. But going back here. So yeah, obviously United Health Group, it's below all the moving averages. The 50 is declining, has a bearish look to it. It did gap up on earnings though. So we don't want to see how it reacts at these short-term moving averages. But overall, the chart is bearish. It's pretty exhausted trend. First leg, second leg, third leg, fourth. J&J definitely has potential for more downside. Merck has earnings tomorrow. Lilly has earnings a week out. And Pfizer's earnings a week out. So, I mean, obviously they all look pretty... Pfizer looks bearish below all the moving averages. It's kind of just been in a chop more than a downtrend. Lilly looks like a very nice chart. I'd be interested if it broke out on earnings. So it looks pretty bullish. Hopefully I'm making sense here with what I'm doing in my analysis right now. Just trying to get a general idea of where the leaders stand. It's kind of difficult knowing that these 3 all have earnings within a week. So, but if we're looking at current face value, these 2 look bullish. I don't know what this gap up was on MRK, but we just filled the gap and now we're holding it as support. So it would be it's kind of difficult to tell, is this more likely going to be a rejection or not, just because in this unique scenario, 3 of the heavyweights have earnings within a week. But let's say all three of these didn't have earnings in a week, I'd probably lean to downside personally, just because for stocks to break out of bases like LLY and MRK, you're going to generally need some meaningful catalyst. So I would basically, we wouldn't have that potential catalyst coming up. So I would say they're probably going to reject. Plus, LLY is below the 50 right now. So that makes sense. The leaders of this ETF all have bearish postures right now. One is really extended to the downside, but it could continue to chop down here. And either way, even if this continued to go higher, if these all went lower, then it would pull XLV down. Anyways. Okay, well, unless you guys have a chart for me to look at, I'm probably going to wrap it up here. So I'll wait 30 seconds, see if there's any chart request, which I love. And if not, we'll wrap it up. Alrighty then. So you guys have a good rest of your day. You could expect me to start posting these live streams now if anyone ever wants to go back, watch any particular section. And that's going to be in the Discord. And I think I'll start including the link in the nightly newsletter as well. So you guys have a good rest of your day, and I will see you in the Discord.